Hello everyone, welcome back to the new video of Market Mastery. In this video, we will understand the Dow theory in trading. This is the most common type of theory used in technical analysis in trading. This theory was given by Charles Dow, who was the founder of Wall Street Journal, as well as Dow Jones and Company. This theory is based on six basic principles. In this video, we will talk about all of them one by one. So, the first basic principle is market discounts everything. So, what does that mean? This means that all the information, even past, present, or future about the company have effect on the price reflected in the stock market. So market doesn't leave anything. For example, the recession has started and information about so many layoffs. The market reflects that as well. Whether it is COVID-19, whether it is recession, anything, any decision, even the quarterly results of any company, everything is reflected in the stock market. So next principle is market moves in trends. So it is a very important principle. So there are three types of trends recognized by Charles Dow, that is primary trend, secondary trend, and minor trend. So how does that work? Let us see in detail. So what is the primary trend? Primary trend varies from 1 year to even several years. It remains the same for all the years. So, what is a primary trend? It is a major and the most important trend in the market, which needs to be determined by any trader. So, when the price is generally going upward, the movement during the years, it's upward direction. The market is bullish, and if it is going downwards, the market is bearish. So, what is the secondary trend? Secondary trend always moves in the opposite direction of the primary trend, which can be for some weeks to some months. You can see the market is going upward direction, but during a phase, the market is also going in the downward direction. So the major trend is bullish. That is the primary trend. But there is a change in the trend for some time. It doesn't mean trend reversal. This is not the primary. This here is not a primary trend that is represented by the red arrow. It means the primary trend is still upwards. The market is still going upwards and bullish in nature if we see it over years. But for some time, market has took a turn. So that is the secondary trend. And then what is the minor trend? Minor trend is the market is going in the primary trend and then took a turn in the secondary trend. So when there is a turn in the secondary trend, then it is known as minor trend. Minor trend, therefore, is the opposite of the secondary trend. You can see, and it is in the direction of the primary trend. Here it is shown by the blue arrow and the red arrow depicts the secondary trend. So let's see in this in a live market. I have opened this chart for Bank Nifty. This is the weekly candle chart and let me show you. So here it is we can say this is as a primary trend of the market. So this is the primary trend of the market that is going upwards. The market is bullish in nature. But we can see here for some time there is a change in the trend. You can see it here. It's a very simple example. There is, and what is the minor trend? The minor trend is you can see here the market is going downwards. But in between, the market has gone upwards as well. Some weekly candles are in upward direction. So these candles, these you can see here, these candles, these are the minor trends in the market. Market is going downwards, but it has changed its direction here. So what is it that? This is the minor trend in the market. Here you can see that. So this is the primary trend, this is the secondary trend, but when the secondary trend took a turn in the opposite direction, it is the minor trend. Minor trend generally varies from weeks to even days. Minor trend is what creates noise in the market, and it is very manipulative in nature. And it doesn't remain for so long, so manipulates the trader. But in the bearish market, all these will be opposite. The primary trend will be downwards, the secondary trend will be upwards, and the minor trend will be downwards. So these are basically the three trends given by the Dow Theory in the market while trading. Coming to the next principle, that is the three phases of primary trend. There are three phases: accumulation, public participation, and distribution phase. So what are these three phases? The first one is here, represented by the green portion, that is the accumulation phase. Accumulation phase means the price is very low, and this means in this phase we have to go and buy the securities. This is when the smart money goes into the market and took the highest gain. Public participation. You might have seen some shares like when they are in the lowest price. That is the accommodation phase, and then they just go very high. And then when they are going high, the public comes to participate. Means many people comes and buy that. And due to public participation, the price again go upwards. And when the price, a point will come, then there is an excess or distribution space. Then we have to sell those security because market will go down again. So the best way is to buy it in the accumulation phase and then sell it in the excess phase. So we have to determine when it is the accumulation phase, when it is the public participation, and when it is the distribution phase to make the highest possible gain in the markets. Market indexes must confirm each other. Dow Jones has given two indexes, that are Dow Jones Industrial Average and Dow Jones Transportation Average. This means that they should move together. Like if industrial average is going upwards, the transportation average is going in the other direction, then the, the they does not establish a trend. The trend is the direction in which both of them go, and they must confirm each other. But industrial average and the transportation average is quite an old thing now, because Dow Jones has made these during a very long period ago, and industrial sector and transportation sector was very important that time, but today it is replaced by technology sector and many other sectors, so these are not used today. Next is volume must confirm the trend, which means if the price is going upwards, the volume should also be going. Sometimes the price is going upwards but not the volume. That is manipulation in the market. And we just traders get stuck in that. So volume must confirm each other. It means it indicates the interest of the people in the particular asset. If the volume is high, it means that many and many people are buying it. Let me show you in the live market. So I'm using Nifty 50 index. So if you see in the market, this is the volume. You can add the indicator of volume. Like I have added the indicator of volume here. You can search here volume and you will get the volume indicator like these bar charts. So how you see that? You can see these some bars are high and some are lows. The market is going in the upward direction. It means that there is a green candle. If you are thinking that market is going up, the volume must confirm that it is an upward trend. The volume should also be high. You can see here the volumes are not high, but here the volume is high. So it indicates that you can go and buy here. The market is going upward. So volume must confirm the trend. Trend remains in effect until clear reversal of. This principle means that the market is assumed to continue, the trend in the market is assumed to continue until there is a clear reversal. It means that we don't have to panic. We have to see that there should be a clear reversal of the trend. If the market is going upward, we should confirm that the reverse, if it is going downward, it must not be a secondary trend. There must be a clear reversal. There must be a clear signal. And we should assume that the primary trend is that in upward direction in the bullish market or lower direction in the bearish market until there is a clear reversal. So these are the 6 principles of Dow's theory. If you like this video, hit the like button, subscribe to our channel, and also press the bell icon to get the latest update. Don't forget to drop down your doubts in the comments section. Thank you very much.